mi è capitato.
Ah, veramente? Ti sto scherzando?
Magari prendi un esercizio da questo che mi disami, prendi l'altro dall'altro.
Sì, magari.
Fai un mix, boom. Problema risolto. Questo è un attimo.
Sì, sì.
Insomma,
Alice, Davide, Ale, Luigi, do you hear me? Alice, Davide, ok, thank you. L'anno scorso non funzionava mai.
Ah sì, veramente? Quante volte l'anno scorso tutti gli esami online hanno fatto
Questo
immagino.
era un caso di perché era
questo è ancora in
ottobre,
presenza?
mi hanno chiuso dopo.
Ah, ok.
Però tutti gli altri online, penso. E lascia stare in analisi online. Il corso unione sono tornati con le mani.
No, io ho fatto tutto online.
Per me come sì, infatti io facevo ragioneria di economia e commercio quando c'era il numero e l'altro strumento per parola, il management era...
Cioè in realtà era sempre tutto, no, forse in presenza, forse online, forse in presenza, forse online, tutto il tempo così, era anche tutti online infatti. Lei segue sempre questo corso l'anno scorso?
Don't worry about
Good afternoon, welcome back. Last tutorial lecture, also for this academic year. Today, business combinations, IFRS 3, provisions, IAS 37, and amortized cost, IFRS 9. First exercise. This is a continuation of what you did during the last tutorial lecture. We can review it from the beginning. Part 1 on 2nd January, year 1, drawing acquired from seller, the business impaired. The consideration was 3.1 million, and then take into account also the other information. Internally generated brand. The fair value was 500,000. Property, plant and equipment, fair value at the acquisition date 750,000, and inventories fair value at the acquisition date 250,000. Moreover, consider the balance sheet at the acquisition date of the business impaired. Please consider that it refers to 2nd January year 1 and the acquisition date. The amount of the property, plant and equipment is 700 because this is the book value, namely the net carrying amount. And moreover, some inventories for 200,000, and if you look at the slide, you do not find the value of the brand, because I repeat again, it is an internally generated brand. Questions: what is the amount of goodwill at date of acquisition? Show the impact on Growing's financial statement at the acquisition date. First step. 2nd January year 1 is the acquisition date, and then you have to compute the fair value in net asset. How to do it? So remind the book value of the shareholders' equity is equal to 8,000, which is the difference between total assets 1.2 million and total liabilities 400,000. If you consider also the value of the brand, the change in fair value of the brand, the change in fair value of the property, plant and equipment, and the change in fair value of inventories, you get a general change which is equal to 600,000, namely the difference between shareholders' equity fair value and shareholders' equity book value. Or, otherwise, another way in order to get fair value net asset. Starting point book value of the equity, 800,000, plus difference between fair value and carrying amount of property, plant and equipment, 50, plus change in fair value of inventory, 50, and the same for brand. you get the value of the fair value net assets. Next step, you have to compare consideration paid and fair value net assets at the acquisition date, namely 3.1 million minus 1.4 million, you get the amount of goodwill, 1.7 million. Consolidated balance sheet on 2nd January year 1, you will find the amount of goodwill, 1.7 million, the fair value of brand, 500,000, fair value of property, plant and equipment, 750,000, and fair value of the inventories, 250,000. And moreover, all the other, please consider that all the other assets and liabilities, we don't have the information for this exercise. Second part, the business impaired is considered as a separate cash generating unit. At the end of the reporting period, 31st December year 1, assets and liabilities of the CGU are the following: goodwill, brand, property, plant, equipment, and so on. But consider that the value in use of the CGU growing at the end of the reporting period is equal to 2.9 million. Again, show the impact on Growing's financial statement as at the reporting date. The objective of this second part is to identify potential impairment loss for goodwill. So, I remind you, non-current asset, in order to get carrying amount, and then in order to compute impairment loss, non-current assets are the only items that could be impaired according to IAS 36 scope. This is important in order to get the carrying amount and then in order to compute impairment loss. But if you consider the previous slide, the amount of non-current assets is equal to goodwill plus brand plus property, plant and equipment. Namely, these are the only items that could be impaired according to IAS 36 scope. And if you compute 1.7 million plus 500,000 and plus 800,000, you get the carrying amount of 3 million. Let's go on. You should be able to identify the impairment loss. Carrying amount 3 million, value in use 2.9 million, you get an impairment loss for 100. But please consider that goodwill is always the item which is firstly impaired, because in reality, goodwill, it doesn't exist. Okay, also intangible assets don't exist, but if you consider that an intangible asset, you can sell it, goodwill, you cannot sell it through a business operation, a business combination. And goodwill is always the first, I repeat it, goodwill is always the first item which is impaired. Since goodwill is higher than the amount of impairment loss, the impairment loss is entirely attributed to goodwill. Now, if you consider this information, namely impairment loss of 100,100 and the previous slide, so the business impaired at 31st December year 1, you should be able to draw up financial statements at 31st December year 1. 5 minutes in order to do it right now. You have to draw up financial statements at 31st December year 1 for the business impaired by considering the impairment loss of 100,000. You have just to consider impairment loss and the slide with data at 31st December year 1. It should be really easy. What is the amount of goodwill at 31st December year 1 after impairment test?
2006.
Any other answer? 1.6 million. Consolidated financial statements at 31st December year 1. If you look at the slide, the amount of goodwill is 1.6 million, and then you have to recognize the impairment of goodwill in the income statement. All the other items are the same. Brand 500,000, property, plant, equipment 800,000, and so on. Is it right? And is it clear? Second part, the same exercise but another percentage of control. On 2nd January year 1, Growing acquired from seller 75% of the business impaired. Again, consideration is 3.1 million and then other changes in fair value. Again, internally generated brand, book value, it should be 0 and the fair value is 500,000. Moreover, property, plant, equipment, fair value is 750,000 and then inventory is 250,000. Again, same situation as on the 2nd January year 1. Book value of property, plant, and equipment, book value of inventories 200,000 and so on. Book value of trade accounts receivable. Question again, what is the amount of goodwill at the acquisition date? This is a recap for you. According to IFRS there are two ways in order to measure non-controlling interest. The first one is according to the fair value of non-controlling interest. It is called full goodwill method. The other one is the proportionate share of the equities identifiable net assets at fair value, standard method. Again, first important point, you have to consider the 2nd January year 1, and then these financial statements at 2nd January year 1. And moreover, you have to compute the fair value in net asset. Again, according to standard method, in order to compute the fair value net asset, you have to start from the book value of the equity, 800,000, plus difference between fair value and carrying amount of property, plant, and equipment, again 50, plus fair value, difference between fair value and carrying amount of inventory, 50, and again plus difference between fair value and carrying amount of brand, 500. You get fair value in net assets. But since the percentage of control acquired was 75%, you have to compute 75% fair value net asset, which is equal to 1.05 million, while the remaining part will be accounted for in the equity, in the consolidated equity, as non-controlling interest, 350. Questions? Second step, you have to compare consideration and 75% of fair value net asset. You paid 3.1 million. If you compare 3.1 million and 75% of fair value net assets, you get a goodwill which is equal to approximately 2 million. It's important, consideration paid is always 100%. Namely the data that you derive from the text of the exercise, and then fair value net assets according to the percentage of control acquired. Consolidated balance sheet on 2nd January year 1. Goodwill 2,005,000 and then non-controlling interest 350. Moreover, again, fair value of brand, fair value of property, plant, and equipment, fair value of inventories, and so on. Plus all other drawings, liabilities, and assets. Just liabilities and assets. Full goodwill method. Please consider that. Okay, the company paid 3.1 million in order to acquire 75% of the subsidiary. When considering this proportion, you could get the amount of fair value of non-controlling interest according to 25% of the overall value. And so if you compute the following proportion, you get the amount of the fair value of non-controlling interest, which is approximately 1 million. 3.1 million out of 75% should be equal to X out of 25%. Because company A, so the holding, purchased a subsidiary and paid 3.1 million in order to acquire 75% of their business. Through this operation, you can get the fair value of non-controlling interest. This is really important. Questions? And then again, book value of equity plus changes in fair value of property, plant, equipment, inventory, and brand, you get 100% of fair value in net assets, 1.4 million. And then, if you compare consideration paid plus fair value of non-controlling interest minus 100% of fair value in net asset, you get goodwill according to full goodwill method. But if you compute, this is important in order to identify difference between full goodwill method and standard method. If you compute 75% multiplied by the amount of goodwill according to full goodwill method, try to compute it. Which value do you get? You get the value of goodwill according to standard method, because it makes well. Technical problem. We're waiting for the computer.
羞涩。你看他们前一说什么？对的，但是还好，太不善良。
我们还有群呢。
对呀，哎，你不在群里吗？
我不在群里。
哎，
Don't go away.
Don't go away.
后可能是以前建的，还是我
对吧？看一下，
可能不知道。
这要怎么加呀？好的。
就是可以试，我自己也进去。
不是可以自己进的，就是有一个 link。稍等，应该是。稍等，你们小组有群吗？
我们PPT 的组有。
那还行，你们怎么样？
还可以。我们今天一直在讨论那个幻灯片。
啊？你们最后还要做幻灯片？
你们不做吗？
问题是不是上传那个什么就好了吗 ？PDF， 我给你发那个。
对，就是幻灯片做完以后，把它搞成 PDF 上传上去。
我还以为你们要在，就是昨天那不是说可以上传 PDF 和 PowerPoint，因为我觉得 PowerPoint 太费劲，而且你要点，一点，然后再说我就感觉已经很紧张了。
对，所以
给你发过去，到时候你可以加我。好。我以为你在群里面 ，sorry， 是我的失误。
没有宝贝，你又不是知道，
我早上也没看。
对，我也不知道你是什么情况。
这边一个长长。
对呀。咋样？感觉不行，可以吗？
我本来想多做一点题，然后今天来问他，结果
没做成，
没做出来。
还有考试卷。
因为还有明天嘛，就是我想说算了，就把时间。
你知道昨天发生啥事吗？昨天我不是有个问题，然后我就发邮件问，然后我看到后面刚问完这个，我就问那个，然后他就挺耐心的，还在一直解释，然后到后面他就说明天有tutorial，我就觉得
因为我昨天是喝咖啡的时候还逗他，我说所以你明天就是下课会留在这边。
Mettite col gruppo WhatsApp.
是。然后我说那你明天课会在这边留着讲上，对。我说那希望可别搞到半夜，问题太多了。他说呀，那我们希望别吧。
然后昨天就问了他好多问题，然后他感觉后面都不耐烦了。那你明天有个tutorial来着，你直接去那啥。我就好。然后我昨天就一直在做这个。
你都做完了吗？
卷子做了。
全做完了。
以前做了，然后全是错的，你知道，我特别伤自尊，你知道吗？
我很伤自尊，因为我是那种习惯性的，就是做题的时候我会喜欢先看一些答案，就是边做题边看答案，我大概有一个印象，因为不想说全做下全是错的，然后可能我做2次类似的题，然后我再做新的题，我大概就会有一些就是印象，大概这种小动作，不然的话真的好。
我发现做错其实挺好的，因为你要是看完答案，对，然后做是可以顺着你就做出来了，但是考试时候反而你又是以你自己惯性思维再去做错。
对，所以考试好的题很多，所以有一些很类似的题都可以大概的去再重复做。不过我真的想不出来，因为昨天我们又新加一部分那个 slide， 我们在处理那个在搞成册。等我晚上就已经差不多10点多了才能上课做一会儿，因为我之前1点的那种算那个。
这都是我上星期做的，我就怕我做不了，就因为我知道我没时间，我就努力逼着自己做了一点，然后我知道我这个星期绝对做完，我就想着提前就想保证这次能考试能考。
现在就很担心考试的问题。
所以我觉得我就是逼自己。
因为我觉得有一些题我还比较擅长，但有一些题，因为就也连那个当时教授上课讲的时候都没来得及回顾嘛，还有一些题做起来的时候就没有那么就不太记得，对，就得先回顾一下之前大概是怎么做的呀，然后现在有什么这些做就类似的，不然但东西太多了。
你知道每次我看完那个第一道题，我做出来做的特别顺，我每次都能做出来，但是过1天以后我再做全是错的，我就当时特别做的还考了很，然后后面就不行，所以我知道我自己有这个问题嘛，所以我就做不管错也对，但是到时候真的把那个错改掉的时候，是你就真正的懂了，就感觉还可以。然后我就在想，他是怎么把这个 上下来的，然后就本来不是1期3个挺大的，还能特别那样抗着吧，就上下去，我就觉得已经有点累了感觉，因为对压力还挺大的。
Anche visto che è diverso da quello che abbiamo noi sul computer.
收到了，我不敢点，我在录呢。回家还没有下课点。
下课了。
我感觉我这学期是我有史以来这辈子问过题最多的时候，最认真的一次学习的感觉。
对，我以前也没有这么。
从来没有这么认真对待一件事。
而且以前的考试都是学完了，然后就是之后再考，他们所以以前就一直学的，然后一般中间可能有个2周多左右复习是那种习惯性的，现在就是学一点考研都是考试太偏了。
我觉得你也真的好认真呀，
我是非常想认真的，我现在认真不起来。
我觉得已经很努力，很多人都，你看后面做的有些可能都没有想要考试的想法，好多人不考，做幻灯片，他们准备下一轮再考，好多人。我们group就是好多。
那你们的小组作业怎么办？
小组作业做，幻灯片做完以后考试下去，就是觉得这次太急了那种，有这种2个一起手段。那我不想拖，拖了我觉得后面更累。
对。
有没有？
就是因为本来这种就相当于给你多一次考试机会嘛。每次在 Webex 都要等好久。
真的。
刚想录他的那块写字，应该写75，然后写个100多号的时候，但他还是会先往画圈，但他就点了2个点。
体育锻炼说表情太可爱了。
我看到那天是啥来着？给他一下脸别通红。
啥时候？
我有点忘了。就那天也是他在讲课，有个意大利人进入问的问题，他用意大利语问的那次，他点一下，对，他点一下别通红。
他是想笑，我都想笑。那女生太可爱了，直接一吼。我知道他之前那个女生用英语问他，好像他说你可以用意大利语，然后他不是用英语吧？
但主要不是那时候，他是在下面，结果笑死了。我去。他这2天也挺累的，你看他这个青春痘比之前起了多少？
我觉得我挺麻烦他挺多的，还挺特别谢谢他，说是也特别耐心，一直在解释。
还是挺可爱的。
有些人可能就觉得不理啊，是不按时回啊，他感觉他事儿肯定也比我们更多，他也在努力。
对，但我看他一直在拿电脑写东西。男神呢？
优秀。
不可亵渎啊！
能力给我们看一下。
对。 我不需要110啊，我110就够了。你看那个小青春痘多么的明显。
我不想大声笑，你知道吗？我就感觉我 hold 不住了要。反正人挺好的，真的，我觉得他。
Maybe here we are again, some technical problem.
Maybe Then
Okay, I was saying, if you compute 75, if you apply 75% to goodwill according to full goodwill method, you get the amount of goodwill according to standard method, because goodwill according to full goodwill method is measured at fair value of non-controlling interest. Okay. Consideration paid, 3.1 million, plus non-controlling interest measured at fair value, 1 million, and so on, minus 100% of fair value net asset, you get the amount of goodwill according to full goodwill method. Okay. Balance sheet, consolidated balance sheet at the acquisition date according to full goodwill method. Goodwill equal to 2.7 million, fair value of brand, fair value of property, plant and equipment, fair value of inventories, non-controlling interest in the equity, 1.033 million, and then all the other drawings, assets and liabilities. Any questions? Next exercise. On 31st December, year 1, PC acquired 100% of subsidiary SA shares for 900 in cash. At the date of acquisition, the book value of net asset equity of SA was 300 capital, and SA has developed a brand name whose fair value was estimated at 250. Consider that 1 year later, on 31st December year 2, the two individual balance sheets are as follows. PC, holding of the group, and then SA, subsidiary. Equipment, consider investment in SA, namely the investment in the equity of SA, cash, liabilities, and so on. At 31st December year 2, 1 year later after the acquisition. What is the amount of goodwill or bargain drew up consolidated financial statements? First step, fair value net asset. Book value of equity 300 plus difference between fair value and carrying amount of brand. You get a fair value net assets equal to 550. Second step, where did you get consideration paid? Consideration paid is the investment that you find in the balance sheet of PC, namely the holding of the group, namely the company which controls the subsidiary SA. And then investment for 900 minus again, fair value net assets, you get the amount of goodwill, 350. Please consider this journal entry. It is really important in order to draw up consolidated financial statement. So, consolidated financial statement refers to the whole group, and so, obviously, it doesn't make a sense finding the value of the investment in SA in the equity of something which is already inside me. And that's the reason the journal entry, in order to draw up consolidated financial statement, has to be as follows. Reduction of investment in SA. But I remind, the investment is in SA is the investment in the equity of the company controlled. And that's the reason why you have to decrease the capital of SA, namely the equity of SA, but consider at the acquisition date, namely 31st December year 1. And so if you recognize investment in SA for 900 and the capital of SA for 300, you have also to account for goodwill 350 and change in fair value of brand 250. If you look at the slide, so consolidated financial statements refer to the overall group. This is the reason why it is impossible to find investment in subsidiaries, namely investment in SA, in consolidated balance sheet. And then this amount is eliminated against the capital of subsidiary, and obviously if there are differences, goodwill, brands, differences in property, plant, equipment, liabilities, and so on, are recognized. This journal entry is really important for consolidated financial statements, balance sheet, consolidated. Any questions?
Can we see again the previous slide of
Previous slide. Which slide?
the first one? Yeah.
Questions?
Capital 900 have capital of 300.
300.
Well, where is that?
900 is the consideration paid, namely the investment in SA, 900. Book value of equity, 300.
The book value equity.
Capital, 300. You don't have to consider net income because it has been generated during year 2 and not during year 1.
But normally the difference is goodwill, it's not the capital. So why now is 900 composed of that two have difference plus the capital? Why not is goodwill actually?
So consideration paid and fair value net asset is always goodwill. Consideration paid, difference between consideration paid and fair value net asset is always goodwill if the amount is positive, otherwise it's a negative. Okay.
Excellent.
Next one.
So here, like capital of SA, I didn't understand why there is a capital.
Because you compared as book value, namely the amount which has been recognized in the financial statement of SA, the capital was 300,000.
That's equipment, right?
No, capital, not equipment. Capital, 300,000.
I think I'm.
We can discuss the end of the lecture. Okay.
Question for you now, since you get this journal entry, you should be able to draw up consolidated financial statement. Please consider this journal entry and then the assets and liabilities of SA and PC. SA, the subsidiary, and PC, the holding of the group. 10 minutes in order to draw up consolidated balance sheet of this case. Or 15 minutes from now. You have to consider this journal entry and this amount. Balance sheet, consolidated balance sheet on 31st December year 2.
What's the problem?
That side, so mainly this equity from the company we bought, right? This is a big company, and we use 900 to buy.
900 in order to buy 300 of SA.
300 of.
You paid 900 investment in this SA in order to acquire a SA, which is equal to 300,000. 300 as book value. But in order to compute differences like goodwill, brand, and so on, you have to compare consideration paid and fair value net asset.
So capital means equity.
Yes, just capital without return, earnings, profit, and so on. Capital issued. You have to compare always consideration and equity at the acquisition date. total assets should be equal to total liabilities for this case.
Anch'io manca qualcosa. Ma i mezzi me li hai messi? Qua, da S6. Visto che l'abbiamo comprato, anche dobbiamo includere i mezzi, no?
Sum up equity, cioè equity of PC. All liabilities, all assets, and then consider this journal entry. The equation should go.
Manca qualcosa. Questo è giusto. Anch'io ho scritto cash. Giusto? Ovvero. Niente, non si scrive, anzi non si scrive. Allora, in totale ah, ok, così è giusto. Devi avere sì.
Yes.
Prima avevamo fatto così,
non
è
lo
giusto
posso
perché
prendere.
esatto.
L'ho dimenticato.
Sì, sì. Sì, dobbiamo mettere tutto. Capito, quello lì da togliere, investment quello lì da togliere, invece abbiamo aggiunto punto.
For the year.
The abilities due aggiunti, quindi 940 più 210. Quindi questo devo aggiungere, questo pure, invece questo capito c'è solo questo qua, perché l'abbiamo tolto da lì. Invece questo parte c'è tutto, ma dobbiamo aggiungere goodwill e brand.
33 plus 3% per year one.
Sta pensando un attimino.
Beh, devi solo sommare una cosa.
Sì, magari manca qualcosa.
Sì, e mettere
E
quelle
così
cose che cambiano.
certo.
Quello è il branding.
Esatto.
Il resto no.
Il resto no.
What material according to IFRS 15, you have to, let's say, compensate, right? Contract assets and prepayments. Then not just contract assets, higher prepayments.
Scriviamo solo balance sheet. C'è qualcos'altro? Lasciando qui. Sì, sì, goodwill. No, boh.
Ma ne hai messo?
Bisogna-
5
sì.
minutes left.
income statement 是goodwill， sì, income statement goodwill. Income statement, quindi solo goodwill è 350, così, trasparente. Iniziato.
看看这个，我感觉有一个十，我不知道咋样弄。
哪个是？
我这边是写的 goodwill 350 ，brand 250。
我写的有点丑。
哎，没事。
Equipment 是1050 ，cash 230，对，还有一个 inventory 280。
210就是。
对。这边的话是 capital 是700，因为你这个里面的 capital 已经在 debit side 减到了300，所以你只剩700。就是 SA 里面那个 capital 你不需要计算它，因为我们已经，对。
我们已经是在900里面。
对，其实已经算过了，所以就不要继续算它就好。
怪不得。
对，就会总会差那么一丢丢的数字的时候就很闹心。net income 都是相加起来，liability 也要相加起来就好了。今天只有14个。
我觉得这个挺多的。
对，今天人少，我觉得是因为大家都觉得今天是问答环节。反正今天本来没啥题，所以他就尽情的给我们时间发挥。
对，今天题挺少的，比起前几天。
今天来时还说问这个题，我说好像感觉挺短的。我说不过也有可能是我错的。
我也是这么感觉。
Probably you should have got
the answer.
Okay, let's go. We can check it together. So I need your help. Which is the final value of total assets or total liabilities?
To me, 2060.
2,160 now. Yeah. Check it. Okay. Consolidated balance sheet at 31st December, year 1. First of all, goodwill 350. Fair value of brand 250. Sum up of equipment 700 plus 350. Where did I get it? 700 plus 350. Investment in SA, for the reason that I've just said, is equal to 0. Inventory 280, cash 230, total assets 2.16 million. Capital, just the capital of the holding, 700, while the net income is composed of net income at 31st December, year 2 of PC, and net income of SA at 31st December, year 2. Moreover, sum up of liabilities, and then you get the total value. Total liabilities, which is equal to total asset. Questions? Exercise for this one is tricky because on 1st January year 1, A acquired 75% of subsidiary B. There are no differences between fair value and book value for B, really easy. But on 31st December year 1, the two individual balance sheets are as follows. Consider the acquisition date and the date of balance sheet of A and B. Capital, net income for B, and capital and net income for A. But the acquisition date is 1st January year 1, and on the 1st January year 1, the company has not generated net income for year 1 yet. But step by step, We can start from here. 1st January year 1, acquisition date, the equity of B was composed of just the capital, because the net income has been generated during year 1. After 1 year, B's equity is composed of capital and net profit. Capital for 4,000 and profit for 1,000. Again, book value of equity at the acquisition date, 1st January year 1, 4,000,000. There are no differences between fair value and carrying amount, 0. Final amount of fair value net asset, 4,000. But company A purchased just 75% of company B, and so if you apply 75% to fair value net asset, you get fair value net asset, which is equal to 3,000. Consideration paid, 5,000. Fair value net assets, 3,000. Remaining part is goodwill, 2,000. Please pay attention. Investment in B, okay. Please consider always the moment when company acquires another one. 1st January year 1, but balance sheet of A and B were referred to 31st December year 1. Any questions? Provisions. First bullet point. In October year 1, a company was sued by a competitor for patent infringement. According to the legal opinion provided to a company by its lawyers, there is 60% probability to win the case, in which case no expenses would incur. With a probability of 25%, a settlement can be reached, which would result in costs of 37 million, while the remaining scenario is to lose the case and pay 98 million to the plaintiff. One by one, state and justify briefly whether there is a need to recognize a provision for each of the following scenarios and the amount of the provision in the balance sheet. First bullet point. Present obligation, yes. Probability of outflow, no, because there is 60% of probability to win, and then as a consequence you don't have to account for a provision in balance sheet. It should be easy. Next step, obviously there is a second scenario, which is for you. In October year 1, a company was sued by a competitor and so on. According to the legal opinion provided to a company by its lawyers, there is 40% probability to win the case, in which case no expenses would incur. With a probability of 25%, a settlement can be reached, which would result in cost of 37 million, while the remaining scenario is to lose the case and pay 98 million to the plaintiff. Question is, identify the value of provision at the end of the reporting period and draw out financial statements for year 1. 50% to win the case, 25% a settlement can be reached, 37 million of costs, and then the remaining scenario 98 million. what is the value of provision at 31st December year 1? First answer, 98 million. Any other opinion? Present obligation again, yes. Probability of outflow, yes, because 25% by settlement and 35% to lose. 60 obviously is higher than 40% of probability to win the case. Reliable estimate most probable amount 98 million, and then provision in balance sheet for 98 million and costs for provision in income statement for 98 million. No outflows or inflows of cash. Balance sheet, income statement and cash flow statement for year 1. Provision 98, balance sheet liability side, and then cost of provision 98, income statement. Again, no outflows or inflows for year 1. Another part for you. In year 2, the new best estimate of outcome is 60 million, which is the impact on financial statements at the end of year 2. A tip for you, reversal of provision. It is like the reversal of impairment loss. Another tip for you, the final amount of provision should be 60 million. Since the final amount of provision in balance sheet will be 60 million, but the previous one was 98, we have to reverse the amount of provision. Okay, Alessandro, thank you. And then the recognition of provision debit side for 38. Balance sheet, income statement and cash flow statement for year 2. Balance sheet, final amount of provision will be 60, and then you have to account for reversal of provision for 38, positive flow in income statement. Again, no outflows or inflows in the cash flow statement. Second bullet point. In year 1, C company started exploiting a nuclear power plant. The government gave C company a license for 40 years to run the power plant with the obligation to decontaminate the site when the nuclear power plant is shut down in 40 years. The cost for decontaminating the site in 40 years is estimated at 8 billion. The discounted value of this amount as of 31st December year 1 is 1 billion. Again, present obligation, yes. Probability of outflow is certain, yes. Reliable estimate So you have to compute the present value of the provision that will occur after 40 years. And so the reliable estimate is equal to 1 billion. And then, again, provision in balance sheet, 1 billion. Third bullet point. During year 1, company B has provided a loan guarantee over 10 million for the benefit of a trading partner company in Middle Earth. Bankers have requested a loan guarantee for this trading partner because of the potential instability of the Middle Earth economy. On 31st December year 1, the financial situation of the partner company is excellent. Since the condition excellent, there is the present obligation, but there is not the probability of outflow, and that's the reason you don't have to account for a provision in balance sheet. Any questions? The last bullet point is not part of the program for this academic year. Anyway, I'll upload the solutions on Moodle. Another exercise, the last one for today. IFRS 9 amortized cost. On 1st January year 1, company A issues bonds. Please consider the following information. Nominal value 5 million. Nominal interest rate 4%. I've just computed effective interest rate 5.104%. Maturity 3 years and transaction costs 150. Question is, apply the amortized cost. Starting point, according to IFRS 9, initial amount of liabilities when applying amortized cost is equal to the nominal value of the liability, for this case bonds, minus transaction cost, because I repeat, the aim of the amortized cost is to spread over the contract for this exercise is 3 years. The aim is to spread the amount of transaction costs over the period of the contract, and namely 150 over 3 years. First, journal entry. Recognition of inflow bank 5 million debit side, and on the opposite side, recognition of liability bonds credit side. At the same time, company has to pay 150 for transaction costs, and then obviously according to IFRS 9, in order to hold the equation, you have to decrease the value of bonds for 150. But nominal interest rate is 4%. Since there is the presence of transaction cost, nominal interest rate will be always different than effective interest rate. I computed it through Excel, and the effective interest rate is equal to 5.104%. If you look at the table, there are the outflows and inflows of cash. On 1st January year 1, the company collects 4 million.85. At the end of the year, the company has to pay the interest for these bonds, 200,000. The same is at the end of the second year, but at the end of the third year, it has to pay the interest and moreover, the overall amount of the bonds, 5 million plus interest of 200,000. And then, according to IFRS 9, financial liabilities must be measured at the end of each reporting period at the amortized cost. But first step, at the end of year 1, company A has to pay the interest. And then we have to account for an outflow of cash, credit side for 200,000. I get 200,000 by applying 4% to 5 million to the nominal value. And moreover, the recognition of interest expense, income statement, debit side, 200,000. At the end of the reporting period, we have to compute the value of interest according to effective interest rate in order to meet the scope of IFRS 9. And then please consider that the initial amount of bonds on 1st January year 1 was 4.85 million. You have to apply the effective interest rate to this value, 4.85 million, and then you get 247 and so on. It has to be recognized in the income statement. Why? The interest paid again is equal to 4% multiplied by 5,200,000. Since you should recognize 247,000 as interest expense in the income statement instead of 200,000, we have to increase the value of interest expense and then, in order to hold the equation, the value of bonds. December year 1, adjustment of interest expense according to IFRS 9. Increase of interest expense for the difference between 247 and 247,000 and so on. And then, in order to hold the equation, you have to increase the value of bonds for the same amount, credit side. Balance sheet, income statement and cash flow statement for year 1. The final amount of the provision will be 4.85 million plus the adjustment that you have just computed. The interest expense will be 200,000 plus again the adjustment according to IFRS 9. While financing activity, the inflow of 4.85 and then the outflow of 200,000 for the payment of interest. Any questions? Okay, now you should be able to draw up financial statement for year 2. In 5 minutes we can check it. Another tip for you is the starting point in order to compute the value of interest expense bonds at 31st December year 1.
is that? 4.85. Okay.
Yes.
Yes, if you apply the interest rate is rounded because Excel was 5.104, and so don't care about that.
So this is right.
Yes, yes. The value of the effective interest rate is rounded, so probably you don't get this amount of interest, but don't care about that. Can we check it?
Again, 31st December, year 2, payment of interest expense 200,000, and then outflow of cash 200,000 credit side. Again, initial amount of bonds on 1st January year 2, namely 31st December year 1, is 4.89 million and so on. Why? Why the interest expense to be accounted for in income statement, you have to apply the effective interest rate. I've rounded it, so probably you don't get exactly this amount, but it doesn't care. So if you apply, because through Excel the effective interest rate was 5.104 and so on, but if you apply the effective interest rate to the final value of the bonds on 31st December year 2, you get the interest expense that has to be accounted for in income statement. And moreover, the interest paid is 200,000 as we computed before. Again, we have to adjust values of interest expense and bonds. Increase of interest expense debit side income statement for 49,000, and then increase of bonds for 49,000 credit side. Balance sheet, income statement and cash flow statement for year 2. Bonds 4.94 million. Interest expense, I repeat, if you apply effective interest rate to the value of bond at 31st December year 1, you get the interest expense for year 2. But please consider that the effective outflow is just 200,000. It has to be accounted for in financing activity cash flow statement. Again, for year 3, recognition of interest expense for 200,000 income statement, and then outflow of cash for 200,000 credit side. Next step, again, you have to consider the initial amount of bonds on 1st January year 3, namely 31st December year 2. If you apply the effective interest rate to this value, you get the final amount of interest expense that will affect the income statement for year 3 to 252 and so on. Why? Again, the interest paid is 200,000. According to IFRS 9, again, you have to increase the value of interest expense and bonds at the end of the reporting period. Journal entry, increase of interest expense, and then recognition of bonds for 52,000. But at the end of the contract, the company has to reimburse the amount of bonds for 5 million, namely the nominal value of the bonds, and then we have to account for an outflow that will affect the cash flow statement in financing activity for 5 million. Credit side. Balance sheet. At 31st December year 3, obviously the final amount of the liability bonds is equal to 0, interest expense 252,000, and moreover the outflow of cash for 5 million for the reimbursement of bonds and the final amount of interest paid for the year 3. This is a recap of the amortized cost in accordance with IFRS 9. Year 1. First column, initial amount in balance sheet, amount of interest that has to be recognized in the income statement when applying effective interest rate, moreover interest paid and principal paid. If you look at the slide, if you sum up these values, you get exactly the value of the transaction costs that were recognized as reduction of liability when the company signed the contract. And then final amount of bonds, balance sheet according to amortized cost, last column. Just a moment. Now I show you I computed values through this sheet of Excel. Nominal value 5 million, nominal interest rate 4%, maturity 3 years, transaction cost 150. Initial amount of the liability is equal to 4.85 million. And then, since the presence of transaction cost, the nominal interest rate is different than the effective interest rate. 4 and 5.104 and so on. But this is the same that you have just seen journal entries. But if I change the value of the transaction cost and I insert 0, obviously the initial amount of liability will be 5 million. The nominal interest rate will be equal to the effective interest rate. This column in the table, of course, will be 0. And that's the reason why the transaction costs are equal to 0. IFRS 9 doesn't product effect. And then, obviously, if I insert 500,000, I get other results. I will upload this file on Moodle, and then for today that's all. This was last tutorial lecture. Thank you for your attention during these 6 lectures, and good luck obviously for the exam and for your academic year. I will be available until, I don't know, for your questions now as office hours, or otherwise see you at the exam on Friday. Goodbye.